Hello and welcome to Money 2020 Hindsight, your cheat sheet for the least you need to know in fintech today. I'm Nick Holland, Global Head of Research with Money 2020. Today, we're going to discuss the crypto summer, the App Store flippening, and of course, we'll have the money shot at the end as well. First of all, though, as we always do, Mickey's not in this week. I have a fantastic alternative guest. We have Rachel Morrissey. Rachel, tell me what the number of the day is, please.
So the number of the day is 250.
Okay. What is that then?
So this is the number of days of crypto winter that we have left according to Grayscale.
Okay.
Grayscale investment.
Do they have like a groundhog for this or something? There's a crypto.
Evidently, they have this idea that the cryptocurrency market will follow the movement of the other markets, and that there's this cyclical nature to Bitcoin. So the Bitcoin market cycles conventionally every 4 years, or approximately every 1,275 days. And the firm defines a cycle when they realize the price of Bitcoin moved below the current market price. So they've set their clocks, and evidently we only have 250 days left until Bitcoin rises again.
Well, that's good to know. So we're going to move into the crypto summer at some point. Although having said that, I think I saw yesterday Ether was up 27%.
Yeah, Ether teased us with spring, didn't it?
It's currently at 1552.
Yeah.
Depending on how you look at it, what point, and Bitcoin's at over 22, so that's not bad. But then also the obligatory doom and gloom that goes with crypto, and I guess typical Bank of England statement here from Sir John Cunliffe, who warned that cryptocurrencies are very vulnerable to sentiment and prone to collapse. It's like, well, of course he's going to say that. So anyway.
Well, and we've witnessed that. You know, crypto has an innate volatility, but people buying crypto know it has an innate volatility. I'm not sure who he's warning.
Yeah, exactly. And also you might have, I'd say, some vested interest in CBDCs. Let's just say that.
Just a little.
Maybe. All right. Okay, moving on. Let's talk about, I call it the flippening of apps versus non-gaming apps, which is actually, I thought it was a very interesting bit of news. Tell me about this, Rach. I'm really kind of fascinated by what's going on in the App Store space.
So this is really cool. The App Store, for the first time, the number of non-gaming apps that are making money for Apple has exceeded the number of gaming apps that are making money for Apple. So, you know, we were all addicted to Candy Crush or Angry Birds or whatever the latest game was that they would put out that really made them the money. But that's not true anymore. So it really shows that the subscription economy is taking off. And because now subscription apps are the majority of the money makers.
So we had a chat about this earlier on, but I mean, certainly I think it's fascinating from a fintech perspective in that a lot of the apps, as we mentioned, fintech apps kind of beget fintech apps, right? And then again, I think there's, even personally speaking, there's a handful of apps that I have subscribed to in the last year or so, partly because it's my job to focus on these, but actually because they save me money and the subscription seems worth it. So I think there's quite a lot of activity in the app space in terms of that shift, in terms of making something that is much more valuable on a monthly basis. And certainly, I mean, this is very indicative as well about the direction that sort of fintechs and incumbents need to focus on. I mean, again, if the App Store is really that important, and it is already, you really need to nail the UX, don't you? So, Rach, tell me about the statistics from the Plaid Report as well, because I think that's kind of a fascinating fintech perspective in terms of how things have been shifting.
Right. A lot of these stats come from the FinTech Effect, which is the report that Plaid puts out every year. And the first one was in 2019. They demonstrated that more Americans were adopting FinTech apps, and that if they adopted one, they were more likely to adopt several. Then in 2020, they showed there was huge growth to about 58% of all Americans using FinTech apps. In 2021, 88% of all Americans are using fintech apps, and a lot of them are subscription apps. So I think the fintech business is a big part of driving this subscription economy.
Yeah, no, I tend to agree with that as well. I mean, certainly from my own perspective, I am. Those are the apps I'll be prepared to pay for, because quite often they pay for themselves. I mean, again, things like
true
ones that sort of deal with maybe again, very meta. I have an app that's I subscribe to that helps me cancel subscriptions. So it's one
of the more useful ones too.
Very cyclical. It's like a stealth. It's kind of I guess, developing its own demise somehow. But anyway, all right. So moving on, let's move on to the money shot, which is kind of the most important conversations that you could have today. But we're going to talk about a very specific series of events that are going on. For that, I'd love to bring in our long-time listener, first-time caller, Scarlett Sieber. Scarlett, how you doing?
I am doing well, and I love all the data that the two of you just spit out. Back to the purpose of this, I was like, I didn't know at least 2 or 3 of those things that I'm now going to use as talking points. So thanks very much, Rach. Thanks, Nick. Got him.
We are purveyors of knowledge, and
that's what we do here.
Sitting here at the idea of 88% of the US having a fintech app is crazy. And the subscription model is definitely a real one. And it's one of those things that gets you quickly. Yeah. Both my husband and I, funny, like random one. It was one of these ads that they get you online where it says like, oh yeah, read a book a day. It's not like the Cliff Notes version, and be the most well-educated, whatever person. Of course, we didn't talk to each other. We both did it. It's $10 a month.
Yeah.
You know that app. I've never actually opened it, but I get a reminder every day on my Apple Watch, which I don't remember setting notifications for, but I obviously did, making me feel like complete garbage because I am a moron because I'm not spending my 10 or 15 minutes a day consuming a new book. So
it's like this thing, my Fitbit, which reminds me that I'm not walking today. And anyway, we digress. Let's Scarlett, let's talk about the world tour we're doing. I mean, obviously Money20 is known for its global shows. We have Amsterdam, we have Las Vegas. We're doing a lot between that. And I was looking at the cities we've had so far have been, again, world capitals, world-renowned centers of fintech and banking. But tell us about where we've been and where we're going.
Sure. I think before I do that, the purpose of the world tours, at least in my mind, was in Vegas and Amsterdam, the fintech communities, the world comes to us, which is amazing. And there's a lot of magic that happens. But for me to be truly community focused, community centric, we have to go back out to those communities, which is really the purpose of it, and just provide value back out. We are the catalyst of a lot happening, but to do that, we need to continuously be tapping the ecosystem and giving them value because it's a synergistic relationship. So the model has been quite similar with twists in each one, but in each case, what we do is we go to a city. We've gone to London, we've gone to Paris, we've gone to New York, we've gone to DC, and then I'll tell you where we're going and where we're at on the 19th of July, i.e. today. But each one had a little bit of a different vibe. So we tried to make sure we connect with that local community and local ecosystem. So for New York, it was around New York FinTech Week. Not surprisingly, we kind of kicked it off with some content for that, did a nice little private dinner. For DC, I wasn't there, but Rach was. So she's probably the better one to talk to about that. But one of the things that we wanted to do was have a closed door conversation. We still had the larger community. We had a great cocktail party, lovely dinner, but we had then a closed door private conversation that wasn't talked about across social. We didn't want it to be because, as I said before, as being the center of that ecosystem, I feel like part of our responsibility is to move the industry forward. And some of that is not going to happen on public stages. Some of that's going to happen behind closed doors. And Rach did an amazing, amazing job leading that discussion in DC, where I am a firm believer that some of those conversations and questions that came out of that will be some of the starters of actually having some real change from a regulatory perspective and beyond. But Rach, is there anything that you would want to add to the DC part that I didn't say?
No, I mean, one of the things I've liked about the world tours is we have really tried to match the personality of each city and the specialty in each city. New York FinTech Week is pretty broad, but DC, we focused a lot on policy and regulatory space because obviously that's what's going on there. And it's booming. The amount of fintechs that are finally waking up to their need to kind of pay attention to policy has kind of boomed in the last year. So it's very exciting. It was really fun to meet all of those and talk about the nature of what policies we think about in the US.
So we've done London, Paris, New York, Washington. I keep wanting to say London, Paris, New York, Munich, and then go into we want to talk about pop music. But San Francisco, which is this evening. I think that is tell us about that. I am unfortunately not attending, but this again suiting the persona of the city. I think we've got a pretty interesting night lined up.
Yes, so it actually, in fact, while we are having this conversation, it's already kicked off. So this morning, there are our closest of our fintech and fitness friends at SoulCycle sweating and burning it out. Now, what I was supposed to be there, but for personal reasons wasn't able to make it over. I had asked Zach, our US content director, I said, if we do this, you have to promise to let me beat you, because he's a big fitness, guy. So I was like, the only way I'm doing this is if I get to be the leader, at least of the two of us, because I don't want to be embarrassed by the real fit people in our industry, which I think is really fun too, because that goes back to each one having a personality. And a lot of times business gets done, relationships get made when you're pushed outside of your comfort zone, or in places that are not like the boardroom or the office. So SoulCycle would be a great example of that, right? Like sweating it out. And I never would imagine seeing this person in this environment. And so it just like it humanizes people too, which I think is really cool. And then tonight, as Rich was saying with DC, its own personality, one of the things that we did in DC is we actually used Yonder pouches, which was nice for us too, because we were able to test from a psychological perspective how people would react to that, because we ended up doing that later. And I know you talked about this in a previous episode about the exchange and how we did Yonder pouches and the psychological implications of that, and people feeling really uncomfortable. Actually, in DC, they seemed quite open to it, but it was a different environment.
Maybe they're used to putting things in pouches in DC. I don't know. I mean, it's
maybe
not so much in Amsterdam.
I think they're used to liking to have conversations without them being recorded.
Absolutely. So San Francisco again sounds fascinating. Well, so, I mean, this evening we have a comedy as well.
So this evening is going to be next level. So we rented out a comedy club because we strive to do things differently and shake it up a bit. So we're renting out a comedy club and essentially doing like a startup pitch meets comedy show on steroids, where it's going to be a lot of fun. A lot of interesting startups will be seen, but done in a way where there's going to be a lot of jokes connected to it, and just make sure people are having a good time. But also, again, giving an opportunity for startups to show themselves. And sometimes it might be a person who's at a current big company, small company, who wants to go pitch an idea, and let's see how the crowd reacts and whether or not the idea may be viable. And who knows, that could be the next whatever. You talked about Plaid earlier. Maybe it's the next Plaid. So
I mean, it's also, test your pitching skills in the real world. So I mean, fascinating from that standpoint. So where's next on the road?
Yes, we have two more confirmed, lots more to come, but the two more that I can talk about publicly is Mexico City in September. Final date TBD, I have it, but I just got to make sure that the powers that be are okay with that. But we have it Mexico City in September, and then Tel Aviv in November.
Fantastic. Both of which are destinations that Mr. Holland hasn't visited yet, just saying it's kind of, get me out of my zip code, please. Anyway, with that, I think fascinating discussion. Obviously, we're really excited about the well, not just obviously the world tour, but the upcoming show in Las Vegas, which we are all hands-on involved in at the moment in terms of prepping for that already, given that it's July, but it's not far off. Anyway, we're going to close out today's show. So thank you so much, Scarlett, for your insights and letting us know a little bit about what's happening on the world tour. Rachel, as ever, thank you so much for being my co-pilot. I'm Nick Holland for Money 2020, and see you soon. Bye for now.